We're seeing a rise in home foreclosures all around the United States, some states more than others. But you have to know that as long as there have been home loans, there has been and unfortunately always will be home foreclosures. But why all of a sudden are we seeing this huge influx of foreclosures to the market? I'm going to share with you the major factors that are driving this increase, how it's going to affect our overall economy, and most importantly, the impact it's going to have on home prices. Now, if you're looking to buy a house or begin investing in real estate, this can be a great opportunity for you. I'll show you exactly the fastest and easiest way to find these foreclosures, how to negotiate the best deal, most importantly, the costly mistakes that people can make when they're buying any bank-owned home. Now, my name is Wayne Turner. For nearly 30 years, I've bought, flipped, built, helped thousands of people with their real estate transactions, and I share this information with you so you can have the confidence knowing that what you learn from this channel is from decades of actual experience. So let's jump in. Now, as mentioned, there has always been home foreclosures, but why all of a sudden have we seen such an influx of foreclosures come into the market? For one, you have to look at interest rates. For literally 11 years, mortgage rates never went over 5%. So a lot of people purchased houses, and when they purchased homes with adjustable rate mortgages. I know it sounds crazy, but you have a lot of people that will relocate into a city and they think, well, I may not be there for more than a year or two or three, so let me just put it on an adjustable rate mortgage. Then they end up staying in the property longer. And in doing so, when you have an adjustable rate mortgage and the interest rate goes up like it did, almost double in 6 months, some people just can't afford their mortgage payment. Now, the fastest way I've discovered to find foreclosures is a website called findmyforeclosure.com. When you go to findmyforeclosure.com, it shows you every single home that's bank-owned, short sales, sheriff sales, you name it. It's going to show you the bedrooms, baths, square footage, the property address, all that. It runs about $39 a month, which is less than $500 a year, and it will give you access to any and all foreclosures, regardless of where you want to purchase. Now, another reason, and this one's pretty obvious, is just the overall economy, inflation. Everything has gone up. And what happens is when people get behind on anything, they start getting phone calls from creditors, credit cards, car payments, whatever it is you get behind on. Even your house mortgage. But I always tell people, never let your mortgage get behind, because once you get behind, it's really, really hard to get caught back up. The other thing you have to consider, and here's the big one, is the pandemic. So when we had the pandemic go through, you have to understand that the United States government stepped in and said banks cannot foreclose whatsoever if there was any sort of hardship. So for 3.5 years, there was no foreclosures. So all of that has been saved up, pin up, if you will, and we're starting to see all of those come to the market now. Now look, I know it's fun to look around at these foreclosures. You'll have the address, you'll be able to go and look at them, but if you're serious about buying them, don't make the biggest mistake that people make, and that is to make an offer on a foreclosure and you're not approved. You want to make sure you get approved with a lender, because when you're approved with a lender, it's like you have cash. So whether you're buying from a builder, a bank, or a homeowner, when you have an approval letter from a credible lender, it's like having cash. So they look at that as cash. And you just have to know, whenever you look at to purchase a foreclosure, the banks won't even accept your offer if you don't have some sort of approval letter, or at least showing them that you have cash reserved to purchase that house. Now, you have to know, to get approved for a loan has nothing to do with the house whatsoever, has nothing to do with any home. So it's not like going out and purchasing a car, you touch it, feel it, drive it, and then you sit in the finance place. It's not that at all. You got to get financing, because it has nothing to do with the home. It has everything to do with you, your income, your credit, and your ability to pay that on a monthly basis. That's why it's so important to not put the cart before the horse, so to speak. You want to make sure that you check with local banks, credit unions, mortgage brokers, and actually tell them what you're looking to do, how much cash reserves you have to put down. They're going to verify all that. They're going to look at bank statements. They're going to look at tax returns. And 620 credit score is the baseline to start that. Now, as I mentioned, you can get a great buy on a lot of these foreclosures, but how it hurts the housing market and how it can have a huge impact, a negative impact, if you will, on actual home values is when a home is foreclosed, it gets put on the market. Once it gets put on the market, it gets sold. Now, it does show that it is a foreclosure, and real estate appraisers can take that into consideration. They're going to look at the details, they're going to look at the condition, and they're going to take that into consideration if, say, someone else around the corner, down the street, or within a 3-mile radius is looking to purchase a property, and they're looking at the value of that home. To make a long story short, foreclosures can bring other property values down. It's just that simple. Now, it's important to know when you're making an offer on these properties, how to get the best deal is just to put your best offer forward and don't get so hung up in the price. I say that because I can't tell you how many times people have bickered over $5,000. In reality, you're financing the home. So you look at $5,000, that's $34 a month. If it's $34 a month and $5,000, you can understand that you're not paying the $5,000. You're paying $34 a month. And at $34 a month, it's going to take you 12 years to even pay the $5,000. The moral of the story is this: if you find a house that you really like and you see the opportunity there and it's going to be affordable for you, just make the offer and buy it. It's just that simple. But look, if you don't buy it and you don't get it, you just have to ask yourself, is that going to be okay? Because if you're making an offer on a foreclosure, oftentimes it's a bidding process. And then through that bidding process, it's just done on a website, right? It's done on a website, and the mortgage company, the bank that owns the house, they're not going to negotiate with you. They're going to tell you, yeah, you got the deal, you got the house, or you didn't. They're either going to reject it or accept it. And you also must know that while you're looking at the property, someone may have been looking at it a day or 2 hours before you, or maybe 2 hours after you, and they're thinking the same thing, that they're going to make an offer. That's why it's so important. If you find a house that you really like, you got to look at, okay, what's the mortgage payment going to be? You can literally Google mortgage payment calculator. And then from there, of course, your lender's going to give you a truth in lending statement. They're going to look at your income, they're going to look at your debt, and they're going to tell you what you can afford and what you can swing as far as a monthly payment. And at the end of the day, they're also going to show you how much house you can afford to pay that payment. The result is quite simple. If you find something that you like, you have to ask yourself, are you going to be okay if you make an offer on it? You put your best financial foot forward, if you will. If they tell you you've been rejected and someone else bought it, are you going to be okay with that? Is it going to be all right just to say next and move on to the next property? Now, once you've made an offer on a property and it gets accepted, you have to know that you can still have that home inspected. I can't tell you how many times people have the perception because the property is being marketed and sold as is. So the bank says it's as is. Well, it is as is after you buy it on that day, but you still reserve the right to do a home inspection. Now, you just have to know a lot of these homes, they're winterized, means they put a solution down the plumbing. They don't turn on utilities. They're not going to turn on utilities, so it's up to you if they will let you even turn the electric on or turn the gas or turn the water and that sort of thing on. Oftentimes they don't. So you are at a higher risk when it comes to that. But one thing you can do to help combat that, if you will, is get out and talk to the neighbors. Ask the neighbors, knock on doors around that house and say, hey, who lived here? How long has the property sat vacant? Oftentimes they'll say, just like I talked to a gentleman a minute ago, said that house has sat vacant for 4 years. Well, that's been 4 winters. And if it hadn't been winterized and it sat vacant for 4 years, rest assured, that house has busted plumbing. Now, please don't get me wrong. I know we're seeing foreclosures and an influx of foreclosures all around the United States, but you just have to know it's not like we've seen in years past. We're not going to see this crazy housing recession, and basically for 3 reasons. One, we're seeing less inventory. We have less homes on the market in this area right now, and we have fewer people buying houses. So you have less homes coming on the market, you have less people buying houses. You also have to know that the lending practices have tightened. So it's much harder to get a loan now than it was, say, before 2007, 2008. And the third is you just have to know that sellers have equity. So if they need to sell, or if they have to sell, if they're faced with a foreclosure, they can actually sell their property and actually make money because we've seen such huge increase in property values. So if you're looking to make an investment in one of these properties, you can go to findmyforeclosure.com, and just know that if a foreclosure comes on the market in your area, it can and may have a negative impact on the property values in your neighborhood. The good news is if somebody purchases that property and they improve that property and then they turn around and sell that property, then over time it can improve your home value. So there is some good with the bad, if you will. Once again, I'm Wayne Turner. Thank you for watching. Subscribe to the channel. I promise you, you'll learn something new on every single episode.